How much are closing costs and what am I paying for? So congratulations, the seller accepted your offer, your loan has been approved, and you're eager to move into your new home. But before you get the key, there's one more step called the closing. The closing is the process of passing ownership of a property from the seller to the buyer. As a buyer, you will sign what seems like endless piles of documents and will have to present a sizable check for the down payment and various closing costs. So how much are closing costs? Closing costs are about 2 to 5% of a home's final sales price. So an example would be if a home costs $1 million, closing costs could range from as low as $20,000 to $50,000. Okay, so what am I paying for? The buyer usually pays for these 9 key items. Number 1, appraisal fee. This fee pays for the appraisal of the property. You may already have paid this fee at the beginning of your loan application process. Number 2, credit report fee. This fee covers the costs of the credit report requested by the lender. This too may have already been paid for when you applied for your loan. Number 3, the loan origination fee. This fee covers the lender's loan processing cost. The fee is typically 1% of the total mortgage. Number 4, loan discount. You will pay this one-time charge if you have chosen to pay points to lower your interest rate. Each point you purchase equals 1% of the total loan. Number 5, title insurance fees. These fees generally include costs for the title search, title examination, title insurance, document preparation, and other miscellaneous title fees. Number 6, PMI premium. If you buy a home with a low down payment, a lender usually requires that you pay a fee for mortgage insurance. This fee protects the lender against the loss due to foreclosure. Once a new owner has 20% equity in their home, however, he or she can normally apply to eliminate this insurance. Number 7, prepaid interest fee. This fee covers the interest payment from the date you purchase the home to the date of your first mortgage payment. Generally, if you buy a home early in the month, the prepaid interest fee will be substantially higher than if you buy towards the end of the month. Number 8, escrow accounts. In locations where escrow accounts are common, a mortgage lender will usually start an account that holds funds for future annual property taxes and home insurance. At least 1 year advance plus 2 months worth of homeowner's insurance premium will be collected. And number 9, recording fee and transfer taxes. Depending on the type of deed, will depend if the buyer or seller pays in California. Transfer taxes are generally paid by the seller. The title insurance company will break down the costs for you. Now, of course, if you're paying cash, some of these fees do not apply. You can always negotiate closing costs with the seller. This is one of the reasons why having an excellent agent on your side is very beneficial. Everything is always negotiable. So if you have any questions, please reach out to us.